Now let's go into this because I'm sure this is the part that you guys have been wanting to figure out for the longest time. All right, a breakout. Does anybody in this room does not know what a breakout is? Don't be shy. I was once like you. Okay, so a breakout is simply this. Prices pushing above, out of a consolidation range or a sideways range. An example of a breakout is this push right here at point 1. So you have a sideways range and prices are jumping above that. A breakdown, by the way, is the opposite. That's prices breaking on the lower end of that. And I'll show you an example of that later. Now, very basic. As the breakout takes place, you're supposed to buy. The reason of the consolidation is no longer there. I have to buy this stock because it's now attempting to move higher. Whether it's going to fail or not should be immaterial for now. The context for this learning is simple. If that breaks out, you buy. Okay? We'll just refine the point so that you'll know how to do that better later. Second, if you miss the breakout, you have another opportunity. If the price happens to turn back and goes back close to the breakout price, that's the next time for you to buy again, if you haven't already. Or if you bought a small amount the first time, when it comes back near your entry price earlier, you can buy some again later. Okay? That's the basic breakout technique and how to enter during that particular situation. Now, how do we know whether tutuloy ito o hindi? What's my confirmation? 1. There has to be good volume. Okay? Fundamental reasoning preferred. That means there must be a reason why it's moving. 3, prices are winding near that particular resistance zone. Right? So for example, this chart that you see here, it has all those elements. Now the reason we want to see, for example, volume pick up like the way you see here, is because as volume increases on a breakout, it tells you that people are following the breakout. May sumusunod. Hindi lang yung isang tao tumira lang, forced the price to break out, and then nobody went along with them. And that's a time when prices normally will come back in. So it's good to have that volume there. But one little tip, sometimes volume comes 1, 2, 3 days after the breakout. And what then? So I know a lot of people there who will not buy a breakout that has no volume. But what happens if the volume comes 1, 2, or 3 days later? And the price is already 2, 3, 4, 5% above. Mahuhuli kayo. So why don't you just do it this way? If you see a breakout and not too much volume, then buy a small amount. Enter already, but don't put your entire position. When you see that the volume is starting to confirm, then you can add later. At least yung puhunan mo, nandun na in the good price, rather than having to wait for it to escalate more. Also, if you have a breakout coming when you have that resistance step up like this, that one almost sure already. Even if the volume doesn't come immediately, that's a much nicer position to jump in rather than coming from the other side. If you have a breakout that comes from the bottom of the chart, in other words, it starts here and then it pushes all the way back up and it breaks out from then, normally I will not touch it. I will wait for the reaction after that before I buy it. Okay? The reason is because you're a lot of people making money right now. Kaba-breakout lang, kumikita na yung bumali dun sa ilalim eh. So why are you going to give them this huge amount of money-making effort now? Wait for prices to be able to make a reaction before you buy that. So again, you don't want to be trading the extendedness of that. Okay, so here's an example of that. So you have a breakout. For example, this is Wilcon. You have prices breaking out of it. So this should be a buy point. Is the volume going up? Yes or no? Yes, okay. Then a reaction came inside. It didn't go all the way back in, but it made a reaction. If you did not buy this one, or if you didn't buy enough, this should be your next level. If you notice the correction after a breakout, look at the volume. It dries up. That means people just like you are waiting for prices to come down. They're not selling their position. They're just waiting for the price to adjust. So you should be prepared to buy in that first reaction of that breakout swing. And if you notice the swing after, nandun na naman yung volume niya. So this is a good way to be able to pick it up. Plus, it comes out par with good news. And so if you have all these materials to be able to justify the trade, that should make a good positive entry for it. Now, let's talk about the size of a pattern. Now, the basic understanding here is the range of a price channel or a range of whatever pattern you see. If it breaks out in one direction, we'll go into that direction with the equivalent size. So, for example, if you have a 6 peso and 50 stock here, the size to 8 pesos, the size is about 1 peso and 50 cents. If it goes above this particular resistance zone, this will go up by 1 peso and 50 cents in the minimum. So you can actually even target this out. So a break over 8 pesos, this will go to 9.50 minimum. That way you can get a sense of whether this is a viable trade or not, and that it can make good money for you. Just apply this to almost any pattern you make. If it breaks down, then it should go down roughly the same distance as well. So in this particular example, here you have an area pattern from 42.60 to 45.25. The size of the area patterns, 2 pesos and 65 cents. And so that means that that should go up by another 2 pesos and 65 cents, giving you a target of 47.90. So again, this is something that you can attempt to do. Again, the pattern, as it climbs up, it starts to wind up just before the resistance area. So this is a good time to be able to move into it. Okay? When you get close to your target, it's time for you to take profits. You don't have to sell everything, but at least sell half. Okay? That will be your safety net. So just in case bumalik yung presyo, at least you come out a winner no matter what. Because if you sell your second position only at the price you bought, you might be squaring there, but the other position is making money. So keep that intact. You have to take half of your profits inside when you hit your target. Or maybe if you have 90% of your target in the bag, kunin na ninyo yung pera na yan. Okay? You don't have to be too exact. I remember this person telling me, 10 centavos na lang, hindi pa niya binenta. Oh. He wanted the 10 cents down to the dot. He was more interested in the target being hit than actually him walking out making money. Right? So don't take it to that game. You can always buy your shares back after it pulls back to your support area. Remember, here you can be a scalper. You take the money, you make sure you have it. If there's a renewed opportunity that comes in later, you can always jump back into that stock later. Please, ladies and gentlemen, you be in control. Because what's going to happen here is if it almost hits your target and it goes all the way back down, believe me, I'm almost sure you're going to liquidate that at a loss. So try to get into the habit of getting money. Put it in your pocket, little by little. Keep it there. That's what a trader does. He's not here for the jackpot.